Ever since Ether stalled in a narrow channel between the 50-day simple moving average at $2,528 and the $2,323 support floor, traders have whispered that the network's native asset is merely marking time. But beneath this apparent calm lies the quiet hum of accumulation, moving averages converging, the relative strength index hovering in neutral territory, and on-chain flows hinting at renewed conviction. If history and theory guide us, ETH's breakout from this sideways phase will not only redefine its own trajectory, but ignite a fresh wave of momentum across the broader altcoin market. 1. The anatomy of the range. $2,323, $2,528 at a glance. ETH's recent price action appears unremarkable, 6 consecutive days confined within a $205 band. Yet when viewed through a systems thinking lens a la Peter Drucker, this range is neither random nor stagnant, is the crucible of renewal. The 50-day SMA, sitting at $2,528, has flipped from support to resistance as bears line up sell orders. Meanwhile, the $2,323 mark has held firm, absorbing dips as buyers accumulate with the patience of long-term visionaries. Daniel Kahneman's work on decision-making under uncertainty suggests that markets often consolidate as participants await new information. Here, that information arrives in the form of spot ETF approvals and institutional flows. The RSI's comfortable midpoint reading signals neither exhaustion nor euphoria, implying that both bulls and bears remain engaged. A move above $2,528 especially. With a daily closewood signal, a shift in market psychology, buyers overcome sellers. An algorithm's program to chase moving average breaks would amplify the impulse. Conversely, a breakdown below $2,323 would hand control to the bears, potentially ushering ETH toward the next support zone at $2,111.20. Breakout targets $2,738 and $2,879 should bulls muster the strength to vault above the 50-day SMA. Technical projections point toward logical targets. The first is the swing high region around $2,738, where E peaked in early June before profit-taking set in. Surpassing that level would confirm the end of the accumulation phase and attract fresh speculative capital, especially momentum funds that scorn stagnant assets. The second, more ambitious plateau lies near $2,879. The apex of the late May rally, the level tied to broader market exuberance. Joseph Schumpeter's theory of creative destruction reminds us that once resistance zones are breached, they invert to become support, clearing the path for swift advance. A daily candle above $2,879 would not only rewrite ETH's near-term narrative, but also signal that the network's fundamental staking yields, DeFi activity, NFT engagement, robust enough to justify higher valuations. At that point, traders would recalibrate risk-reward. Stop-loss orders would trigger short covering, and FOMO-driven inflows could propel ETH into the $3,000 territory. 3. The peril of failure. A descent to $2,111 on the flip side. Failure to conquer the 50-day SMA would embolden the bears. A decisive break below $2,323 carries the risk of an accelerated slide toward the next structural support at $2,111. That level coincides with both the 100-day SMA and a confluence of Fibonacci retracements markers that traders watch closely. If ETH revisits $2,111, short-term sentiment would sour. Altcoins across the board would suffer. Capital might flow back into perceived havens like Bitcoin or cash-yielding DeFi products. Nassim Taleb's concept of anti-fragility suggests that assets exposed to volatility can emerge stronger, but only if they survive the stressors without catastrophic damage. A brief retest of $2,111 could serve as that stress test, purging weak hands and verifying the resolve of long-term holders. However, A protracted stay below $2,323 risks establishing a lower trading range, dampening enthusiasm and delaying any broader alt season. For institutional inflows, the engine of accumulation while technicals set the stage, fundamentals write the script. Glassnode reports that 106,000 ETH flowed into spot ETFs last week, marking the 7th consecutive week of positive institutional inflows. This steady tide of capital reflects growing confidence among asset managers, endowments, and family offices. That Ethereum's transition to proof of stake, coupled with its DeFi and NFT ecosystems, underpins long-term value. Milton Friedman's monetarist insights remind us that when money supply grows faster than output, nominal asset prices rise. Here, ETF inflows create de facto permanent demand, reducing float and exerting upward pressure. Each ETH locked in an ETF vault is one less token available to traders, intensifying the supply squeeze. Moreover, institutional allocations carry a multiplier effect. Prime brokers, lending desks, and custodial services feed off the initial commitment, generating derivative products and structured notes that compound demand. 5. Altcoin ETF. Prospects, a rising tide lifts all boats. It is not only Ethereum that stands to benefit. Bloomberg analysts Eric Belhunis and James Seyfart have boosted their odds of spot ETF approval for Solana, XRP, and Litecoin to 95%, with SEC decisions slated for October 2025. Beyond that, Dogecoin, Cardano, Polkadot, Hedera, and Avalanche carry 90% probabilities of receiving green lights in Q4 2025. Even Sui and Tron, via Canary Capital's filings, sit at respectable 60% and 50% odds. Respectively, John Maynard Keynes likened markets to beauty contests. Investors pick assets based on what they think others will deem valuable. The promise of new ETF products creates a self-fulfilling momentum. Traders front-run adoption. Price gaps open as index tracking flows materialize, and media coverage amplifies the narrative. When Ethereum breaks out, capital will not only chase ETH's rally but also seek the next levered plays among altcoin ETFs, magnifying the impact across the decentralized finance ecosystem. 6. Network effects and innovation cycles beyond ETF catalysts, Ethereum's protocol upgrades, and ETF's Ethereum's protocol upgrades, and ETH developer activity form the bedrock of sustainable growth. Durrana Simaglu's research on innovation systems underscores that technological ecosystems thrive when network effects amplify use cases. Ethereum's robust smart contract architecture, backed by a thriving developer base, continues to attract new dApps, Layer 2 solutions, and cross-chain bridges. Each successful deployment, be it an optimistic rollup or a novel DeFi primitive, bolsters user retention and transactional volume. Vaclav Smil's empirical analyses of technological adoption reveal that platforms crossing certain usage thresholds often experience exponential takeoff. As ETH locks grow in staking contracts and DeFi TVL, total value locked climbs past key inflection points. The protocol's value proposition solidifies. A breakout to $2,879 or beyond would signal not just a market phenomenon but the crystallization of Ethereum's role as the world's programmable settlement layer, a narrative that supports higher multiples. 7. Behavioral finance and the fear, greed, pendulum animal spirits. As Keynes described, animate markets beyond cold-blooded fundamentals. Daniel Kahneman's prospect theory framework shows that investors disproportionately react to gains and losses. Clean breach of resistance levels would trigger relief rallies, slashing perceived risk and attracting momentum traders. Conversely, a faux breakout or bull trap could unleash panic selling as traders confront cognitive biases like anchoring and loss aversion. Crypto's notorious volatility amplifies these swings. Social media sentiment indexes often spike in lockstep, with key price events driving herd behavior. When Ethereum's price convincingly closes above $2,528, especially on higher volume, the resulting euphoria could cascade through chat groups, Twitter feeds, and trading bots, accelerating the ascent. The inverse holds true for downside flips. Once $2,323 is breached, fear could metastasize rapidly, deepening the retracement. 8. Timing and catalysts. What could light the fuse? Several catalysts loom on the horizon: ETF approvals, a favorable SEC ruling on Ethereum spot, ETF soar. Even a broader crypto asset index ETF would flood the market with fresh institutional allocations. Protocol upgrades. Completion of anticipated scaling solutions, such as sharding rollouts or major Layer 2 launches, could sharpen ETH's utility narrative. Macroeconomic shifts. A dovish pivot by the Federal Reserve would steer capital toward yield-starved assets, including staking yields on Ethereum. Major corporate adoption, high-profile treasury allocations, or payment integrations, perhaps by a Fortune 500 firm, could showcase Ethereum's real-world use. Any one of these sparks, applied to a market already primed by narrow volatility and ETF inflows, could trigger the breakout that heralds July 2025's altcoin season. 9. Risks to watch. Avoiding the mirage, despite the promising setup. Caution is warranted. Regulatory headwinds, whether through broad AI oversight that accidentally ensnares smart contracts or hostile tax interpretations, could create uncertainty. Over-leveraged positions near the range boundaries might blow up and cascade into volatility spikes. And a sudden macro shocks, such as a hawkish Fed surprise, could reverse the risk-on narrative overnight. Sophisticated participants will hedge exposures with option strategies, layering call spreads above $2,528 while protecting against downside. With protective puts near $2,323, others will scale into positions incrementally, ensuring they do not overcommit ahead of high-impact events. 10. Conclusion. The dawn of a new altcoin wave. Ethereum escape from its sideways chamber is more than a momentary price event. It is the unlocking of a broader altcoin renaissance. When ETH clears $2,528 and then $2,879, it will validate the convergence of sound monetary economics, institutional adoption, and innovation theory. Joseph Schumpeter's waves of creative destruction will sweep away complacency. Nassim Taleb's anti-fragility will reward those who endured the accumulation. And Keynes's animal spirits will propel a fresh flood of capital into emerging tokens. In this unfolding narrative, Ethereum is the bellwether barometer of appetite for decentralized finance, NFTs, and programmable money. As ETH breaks free, altcoins poised for ETF's inclusion, Layer 2 scaling plays, and tokenized real-world assets will find themselves carried on the same tide. July 2025 may well mark the month when the dust settles on sideways trading and the next chapter of crypto's evolution begins in earnest. For traders, developers, and visionaries alike, the time to prepare is now. The wave is forming, and those who ride it will shape the future of finance.